Dear learners of class 11 and 12 business studies, welcome back to our lecture number 3 for the chapter of 6, that is the name of accounting for receivables from accounting first paper in ACC level, that is accounting learning workbook level 1. Dear students, I have already given the 2 lectures for this chapter, that is accounting for receivables. The first one is theoretical based discussion and second one full solution for creative question. Today I will discuss and solve also for a new creative question. This is the very easy chapter for the subject of accounting first paper, I think you have already understood all lessons of this chapter. This is the lesson number 3 for this chapter. I think you are ready to take my new lecture for this chapter. Now you can take your accounting learning workbook level 1 and your accounting practice copy or solving copy. Dear learners, in the previous lesson, that is lesson number 1, I have already discussed the items of receivable. Just I revise it for recovering this chapter in all time and also help for solving the creative question. The term receivables refers to amount due from individuals and other companies or institutions or parties or customers or organization. Their claims that are expected to be collected in cash. Types of receivable. 3 types of receivables, accounts receivable, notes receivable or bills receivable. Third one, others receivable, that is non-trade receivable. Account receivable and notes receivable are related to trade receivables. Now you can see in the slide, account receivable. Account receivables are amount owed by customers on account or on credit. The result from the sale of goods and services on account or on credit. These receivables generally are expected to be collected within 30 to 60 days. They are the most significant type of claim held by a company or business organization. Account receivable is a legally enforceable claim for payment from a business to its customer or client for goods supplied and or services rendered in execution of the customer's order. Dear students, you are watching in the slide for revision first lecture, difference between bad debt and provision for bad debt. For definition, bad debt is the amount which is irrecoverable from customer. For definition of provision for bad debt, a provision which creates doubt of certainly realization is called provision for bad debt. Loss-based, bad debt is a loss, is an actual loss, but provision for bad debt is a future loss. Realizability, it may realize or not, future loss may occur or not. Balance shown for bad debt, balance of bad debt is to be closed at the end of the year. There is no closing balance, bad debt at the end of the year, but balance of bad debt provision to be shown at the end of the year, that is in each year. Entry for bad debt. General concept, bad debt account debits and debtors credit, but in modern age, this entry is to be allowed for provision for bad debt or allowance for bad debt or reserve for bad debt or allowance for doubtful debt account debit, accounts receivable credit. Provision for bad debt entry. This entry is to be As usual, bad debt account, that is bad debt expense account debit, bad debt provision account credit, or allowance for doubtful debt account credit. Just for remembering, I am showing the previous lessons very important topics. Now, journal entries for bad debt and provision. In each year, the following entries to be recorded. You know, from the first lecture and second lecture, totally 3 journals are recorded in each year. Only 3 entries are recorded in each year in all organizations for bad debt and provision in modern concept or in modern age. The first one is allowance for doubtful debt or provision for bad debt account debit, accounts receivable account credit to adjust uncollectible bad debt. Second entry, uncollectible debt expense or bad debt expense account debit, allowance for bad debt or provision for bad debt account credit to record estimated uncollectible debt expense or additional allowance amount of bad debt. Third entry, income statement debit, uncollectible debt, that is bad debt expense credit to record transfer of bad debt to income statement. I repeat again, in each year only 3 journals are to be shown for recording procedure of bad debt and provision for bad debt. The first one is provision for bad debt debit, accounts receivable credit. Second one, bad debt expense debit, provision for bad debt account credit. Third one, income statement debit, bad debt expense credit. Now you can see how to open a ledger for allowance for doubtful debt or provision for bad debt account. It has 2 sides, in debit side and credit side. In debit side, totally 4 columns: date, account title, journal, folio, taka. In credit side, date, account title, journal, folio, taka. Totally 4 heads or 4 accounts or 4 balances are to be shown in allowance for doubtful debt account. In left side, only 2 accounts. First one, account receivable. Second one, balance CD, that is closing balance of the account. In right side, that is credit side, January 1, balance BD, that is opening balance. And last posting, uncollectible debt or bad debt expense account. Totally 4 posting are related to allowance for doubtful debt in each year. And next one, format of bad debt expense account. In this account also 2 sides, debit side and credit side. In debit side, only 1 posting, that is allowance for doubtful debt or provision for bad debt. And credit side also 1 posting, that is for income statement. That is the third journal recording procedure. Bad debt expense never shows closing balance or opening balance. This account is always equal. There is no balance, that is opening balance or closing balance. Dear students, I think you have remembered to write or to record for accounting for receivables. Dear students, this is the lecture number 3 for creative question solutions. Creative question number 2. The following is exact of the trial balance of Mr. Khan as on 31st December 2019. Only some information taken from Mr. Khan. Bad debt expense in debit side, taka 10,000. Accounts receivable, taka 4 lakh in debit side. Allowance for doubtful debt, that is provision for bad debt, taka 14,000. It is required to maintain an allowance for bad and doubtful of debt at the rate of 5% on accounts receivable. This is the other information. From this step, you have to complete the 3 requirements. First one, prepare journal entries. Second one, prepare provision or allowance for bad debt account. Third one, show relevant items as would be shown in the income statement and statement of financial position, or how to show in income statement and financial position of bad debt and bad debt provision and debtors amount. Dear students, at first you have to complete the workings or necessary information for finding out the amount which is to be shown in journal. So we can go for necessary workings. Dear students, for these workings you have to know at first new provision for bad debt to be charged. So new provision for bad debt at the rate of 5% on account receivable, that is the amount of account receivable 4 lakh. So new allowance for bad debt or new provision for bad debt 4 lakh into 5%, that is the amount of taka 20,000. So this is the target amount. In balance, allowance for doubtful debt is given, that is the old allowance for bad debt 14,000. So you can start with this amount. Allowance for doubtful debt, that is 1119 taka 14,000 less bad debt expense, that is the amount of taka 10,000. So 14,000 minus 10,000 is equal to taka 4,000. But our target is the amount of taka 20,000. So additional allowance to be taken for bad debt amount 16,000. 4 to 20, that is 16,000 to be required or to be needed. I have already said the necessary information of workings for this math for this year. Now you can go for recording the journal entries. Totally 3 journals. 3 journals are related in each year. So 2019 first journal is allowance for the bad debt account or provision for bad debt account debit, accounts receivable credit. To adjust uncollectible debt in this math, total uncollectible debts amount taka 10,000. So first journal is completed. I repeat again, allowance for the bad debt account debit, accounts receivable credit taka 10,000. Second journal, uncollectible debt expense or bad debt expense debit, allowance for bad debt account or provision for bad debt account credit. To record required additional amount of allowance for doubtful debt, that is 20,000 minus 14,000 minus 10,000, that is the amount of 16,000. Second journal is for additional allowance of bad debt, so 16,000 is additional allowance, so second journal amount 16,000. And third journal is for transferring a bad debt expense account to income statement. The third journal is income statement debit uncollectible debt expense or bad debt expense credit for taka 16,000. The students have already completed the journal entries, the requirement A. I think you have written in your accounting copies properly. You have understood. Now we can go for requirement B. Allowance for bad debt account or provision for bad debt account is to be opened. In each account or in each ledger in traditional format, 2 sides are available. In left side there is debit side, in right side there is credit side. And each year totally 4 postings are available in each account, that is allowance for bad debt. And debit side, that is December 31 to be used, that is for accounts receivable, and December 31 balance CD, that is closing balance of account. And right side January 1, the balance BD, that is the opening amount of allowance for bad debt. And second posting uncollectible debt for December 31. So in this math, balance BD is given in the balances, that is 14,000 for allowance for bad debt. It is written as balance BD taka 14,000. And for journal is allowance for bad debt debit, accounts receivable credit. So you are opened allowance for bad debt. So in debit side you have to go but opposite direction, opposite account to be written, and accounts receivable for taka uncollectible debt, that is bad debt taka 10,000. First journal or first posting is completed. Another entry is for allowance for bad debt. The second journal in each year, that is uncollectible debt expense debit, bad debt provision or allowance for bad debt credit for additional allowance amount. In this method, additional allowance amount of money for bad debt expense taka 16,000. So at this moment, total of credit side is taka 30,000, but total of debit is taka 10,000. So additional or missing amount of allowance for bad debt, that is closing balance of allowance for bad debt, is taka 20,000. So balance CD taka 20,000. Dear learners, I think you have already completed the requirement A and requirement B. Accounting for receivables is very interesting chapter for accounting first paper. You are seeing this is the very easiest chapter or easiest recording procedure. So now we can go for requirement C. Requirement C, how to show in income statement and statement of financial position of bad debt and bad debt provision and debtors amount. So at first you can go for showing the income statement. And the very easiest, only 1 year posting to be transferred to income statement and financial position. In income statement, only one posting, bad debt expense or uncollectible debt expense. Income statement is a very big statement, but only one item to be shown for recording bad debt and bad debt provision. That is the net amount of bad debt expense or additional allowance amount of bad debt expense to be shown in operating expenses of income statement in each year. In this map, only 2019 is shown for operating expenses, that is uncollectible debt expense taka 16,000. This amount needs to be transferred as additional allowance taka 16,000. In this math, income statement is completed as only 1 year maths. Second statement, statement of financial position as at 31st December, that is balance sheet. Balance sheet only assets and liabilities and contra asset. So in 2019, you have to go at first asset side and have to find out current assets. Accounts receivable are related to current assets. So account receivable amount taka 4 lakh is given. But the new allowance for doubtful debt, that is 5% on debtors or account receivable. So 4 lakh into 25%, that is the amount of taka 20,000. This amount is to be deducted from the account receivable. So 4 lakh minus 20,000, that is the amount of taka 3,80,000 as current assets in 2019. Dear learners, I have already completed the creative question. For matching your solution, you can watch in the slide from journal entries. Allowance for bad debt account debit, account receivable account credit for 10,000. Second journal, collectible debt expense debit, allowance for bad debt account credit for additional allowance or additional amount. Third journal is income statement debit, uncollectible debt expense or bad debt expense account credit for taka 16,000. Dear students, for recovering in this math, I repeat again, totally 3 journals are to be shown in each year's journal. Entries are recording procedure. I have already said the system or procedures in several times. So dear learners, thank you so much for today. Allah